Would please now help me welcome Kyle Frank, Vice President Exploration of Troilus Gold Corp. Troilus Gold Corp is a Canadian-based mining company focused on the exploration and development of the Troilus Gold Project in Quebec, aiming to become a significant gold producer.
Thanks, Stephen, for the introduction. Hi, everyone. Thanks for being here. I know it's dedicated to be here on the last day. I'm excited to talk about Troilus. We've got a lot to talk about this year with a recent update of our feasibility study that came out about 3 weeks ago. So I'll walk through that, the details of that, what that looks like. For anyone that doesn't know Troilus, this is a past-producing, open-pit gold, copper, silver project in the southern James Bay in Quebec. This was operated by Inmet for 14 years, produced 2,000 ounces of gold, 70,000 tons of copper during that time. Inmet was focused on other projects that they had, didn't invest a lot of capital into drilling and resource expansion, and when the mine was exhausted, they moved it to care and maintenance and shut it down. So that left a great opportunity for someone to come in and start drilling this project. We acquired it in 2017, went public in 2018, and we've been drilling pretty aggressively ever since. So we've drilled, at that time it was really considered a 2 million ounce underground target with resources below the past producing 87 pit. Since that time we've drilled 300,000 meters and we've transformed an underground target, 2 million ounces to 13 million ounces open pit only. So this is one of the largest developing projects in Canada, and we're very excited about the results of our feasibility study. So look at our capital structure. We're in a good cash position right now with $13 million in the bank. We're well covered by the street. We have strong institutional shareholders making up about 65% of our shareholder base. 15% of those are Quebec-based funds, so the Quebec government essentially, very supportive of the project. I'll speak quickly about our leadership team. Justin Reed's our CEO. He's a geologist originally and capital markets executive with over 20 years experience. He founded this company, was part of the team that found the asset and purchased it. Jacqueline Leroux is very experienced in permitting mines, has been through this process several times, is one of the best in Quebec, one of the best in Canada. I'll talk briefly about someone on our board is Eric Lamontagne. Eric Lamontagne was actually the mine superintendent of Troilus when it operated in the past. Very familiar with Troilus, obviously the community, all the stakeholders involved. He's currently the general manager at the Greenstone project in Ontario. Very similar build to what Troilus would be, so a great asset for us to get real-time data coming back to us on costs and all of the challenges that go with moving a project into construction. So I mentioned already we're in Quebec. Don't need to talk about why Quebec's so great. We're about a 2-hour drive from Chibougamau. It's accessed by road. And Chibougamau has a rich history of mining, very supportive of the industry. There's several projects that have operated based out of Chibougamau in the past, including Troilus. So we're in the Frotet-Evans Greenstone Belt. It's just north of the Abitibi. You can see our property in the top right of the screen in the gold-colored claims. The Frotet traditionally is underexplored compared to the Abitibi. There's more till coverage, less outcrop, harder to make discoveries, but very similar rocks, similar age, similar structural controls on mineralization, similar alteration. So leaves the door wide open for discovery. So a closer look at the property. We have 500 square kilometers in the belt, all of which in the greenstone volcanic rocks, all prospective for precious metals. You can see the resource pits sort of in the north part of the property. In the bottom right corner is a picture of the past producing open pits. So it's 2 open pits, 87 and J. They're both filled with water right now. We have permits to dewater, and we're currently setting up the infrastructure to do so. So we're going to kick that off this summer. All right, so moving into the feasibility study now. This is a generational asset, large scale, a lot of job creation in the north of Quebec, 22-year mine life as it is right now. Peaks at over 500,000 ounces equivalent of production. When I'm talking about ounces, it'll be equivalent ounces unless I state otherwise. So gold, copper, silver, about 83% gold, 15% copper, 2% silver. So that's peak production year 7, and then averages about 300,000 ounces life of mine. A couple more highlights. So looking at the economics of our base case, this has an NPV of 885 million and a post-tax IRR of 14%. The 14% I think is really comparable to other projects of this size and scale. We'd see large scale, high throughput, long life mines don't produce a high IRR, so we expected that number. We're happy with it. We think it's comparable to others like any of the other Canadian large scale assets that you see. Here's our gold production profile. So I've mentioned already we peak in year 7. Other than the peak in year 7, we remain pretty constant. There's not a big tail off at the end of the mine life with that 300,000 average. It's important to talk about all 3 metals with this project. We really want to focus on copper as well as gold, along with producing over 240,000 ounces average of gold only life of mine. We also will produce about 17 million pounds of copper. So just under 400 million pounds life of mine. Certainly one of the biggest, would be one of the biggest producers in Eastern Canada of copper. I've already talked about the breakdown of the metals. Just want to also say that we would produce about 75,000 tons of concentrate per year. The concentrate's very attractive for off-takers. We don't have a lot of nasties at Troilus. It's a very clean con, 15% copper, around 100 grams gold, very low lead, zinc, arsenic, all those things that you don't want. Not refractory ore. We get great recoveries, around 92%, and I'll talk about the flow sheet in the coming slides. So the thing about these projects, large scale, high tonnage, they're cash flow monsters. So we're going to average at our base case about 150 million in free cash flow per year for a total of 2.2 billion over the life of mine. At our blue sky case, which was the average metal prices in April, which we all know were excellent, we jump up to about 200 million in free cash flow per year and 3.5 billion over the life of mine. CapEx came in just under 1.1 billion. It's a big number. If you compare it to other projects of our scale, it's actually, you might even think it's a bit low. There's a reason for that. We have a lot of inherited infrastructure from the past operation. We have roads to site, power line to site, 50 megawatt substation at site, and probably most importantly, on the right side of the picture is a fully permitted and constructed tailings facility that's ready for operation. So we value that at about 500 million US. So knock that off the CapEx right away from the start of the mine. We tried to be very realistic in operating costs. We wanted to put out a study that was robust and could stand up to scrutiny. I think we've done that. Our all-in sustaining cost is about 1,100 per ounce and $19 per ton of ore produced. So comparing ourselves to our peers, on the chart on the far right compares us to other emerging producers that have put out studies in the recent years. We're sort of the first one to lead the way in the new post-inflation, post-COVID gold price, like this era. So we're at the highest of that group. I think that's a good place to be. We don't want to certainly come out and say that we're going to be lower than the rest. That's just the environment we're in. So used really realistic prices in our all-in sustaining cost. Quick look at the mine site layout. I won't spend too much on this. We've all seen kind of these before. So the flow sheet. This is something important at Troilus. This is really simple. This is exactly what they used in the past. It's grinding, flotation, gravity circuit. Absolutely no cyanide at all. That's something excellent we can boast, especially heading into permitting and engineering. It also takes money off of our OpEx, not having to use cyanide. Like I mentioned, averaging about 92% recoveries for gold, copper, and silver. So not reinventing the wheel. This is proven in the past to work. It's just an optimized circuit, optimizing grind, optimizing recoveries. So I mentioned our large resource. It's about 11.2 million ounces equivalent indicated, 13 million ounces total. You can see here the footprints of our mineralized envelope in red. You can see the resource pit shell sort of in orange and the reserve pit shell inside that in black. So our reserve captured about 7 million ounces of the total resource. There's opportunity there to expand those to bring more into the reserves, but certainly large scale and robust. So we're still a grassroots exploration company. We have 500 square kilometers in the belt. We have teams in the field each year. We're just kicking off our field season this week. We have prospective targets across the belt that we're actively exploring. We're hoping to do a bit of drilling regionally, maybe a few thousand meters this year. So the teams are going to go out and continue developing all of these targets and getting them drill ready. So everyone's interested in the timeline, I'm sure. You can see on the far left of the screen is where we are now with our feasibility study. We're currently working on our environmental impact assessment, which we hope to file by the end of this calendar year. Once that's filed, we're looking at hopefully 10 to 12 months to get all our permits in hand. That's aggressive but realistic. We're working on project financing as we speak, having all the conversations. Like I said, we have attractive con for offtake. We have a lot of levers we can pull with this project, especially being multi-metal. We're on the path to kick off construction, hopefully by end of 2026, early 2027, looking at an 18-month build for the project. ESG has always been a focus of our company. We were the first to be Eco-Logo certified in Quebec. We've recently partnered with Tuglick Energy to work on a pathway to carbon neutral operation in the future. I'll highlight that BlueMetric and Stantec are working on our ESIA as we speak. And just really since the formation of the company, this has been something that has been a main focus of ours. So just to wrap up, summarize, this is a large-scale generational asset. It's going to operate for a long time in the north of Quebec, bring a lot of jobs to the region. In a region that's familiar with mining, that is really looking forward to having a mine come back to the area because they've seen before the benefits that it brings and the impact on the community. So thank you very much.